Hi, welcome back. And in this lecture, we are going to study that how to read a bank statement. So if you already know how to read a bank statement, you can skip this lecture. But if you want to learn that how does banks use the system of debits and credits in their statements and why is it the reverse way, then yeah, this lecture is for you. Now there can be various types of bank statement like suppose, okay, this is a bank statement of a Harvard bank, that is a prestigious bank in United States, and I have downloaded it from internet. It is a sample statement, okay. So there are various types. One is the simple type, that is deposits and electronic credits, that is okay, transferring from one account to other account. Okay, so this one is withdrawal, and this one is what has come into the bank, and this is what went out of the bank. Okay, so this is a simple statement, but there are statements that are not this simple and that has debit and credit in their accounting, in their statements. Okay, so what if instead of debits and credits they have, what do you say, they have deposits and this is withdrawal. Okay, withdraw, and this one is deposit. So if you don't want to understand the logic behind it, you can leave this lecture now and just skip on to the next lecture. But let's learn why is this withdraw debit and why is this deposit credit. So yeah, okay, let's delete this, and suppose we have this right here is us, and suppose we are John Doe. Okay, and this right here is bank. Okay, bank as in the bank owner. Okay, now I'm writing bank owner because it will be much more clear instead of bank. So what will be the entry when we deposit our cash into the bank? Let me write it here. John Doe, and suppose we deposit into the bank, deposit. Okay, the entry will be bank account debit as bank is the receiver, to cash account as cash went out. Cash account. Cash is a real account, debit what comes in, credit what goes out, cash went out. Bank is a personal account, debit the receiver, hence bank is debited. Now moving on, what will be the entry in the books of the banks? That is, whenever we make an entry, we have to think from the perspective of the owner. The perspective of, okay, there are two perspectives. First one is from the perspective of John Doe, that is us, from the perspective of bank owner. Let's see what will be the entry in the books of bank. What do you say? Say, come on, try. Well, I'll say that cash came in, cash account debit, that is debit what comes in, that entry is for sure. Okay, and whom did it came from? So it came from John Doe, right? As John Doe is a personal account, what is the rule of personal account? Debit the receiver, credit the giver. John Doe gave, hence it should be credited, okay, to John Doe account. Okay, now consider this and let's stop right here. Going back to the statement, and that is, this statement is from the viewpoint of, what do you say, this statement is from the viewpoint of bank. Okay, hence this is a statement in the books of account of bank. So the perspective what here will be taken is from the perspective of the bank. Let's open those journal entries, and the journal entry says from the perspective of the bank owner, the entry should be cash account debit to John Doe account. Hence, as John Doe account is credited, so whenever we deposit some amount, it will be credited. Right here you can see. Okay, so this is how bank's statement work, and that is why a bank statement is always confusing, because it is opposite. So suppose the bank statement came to John Doe. John Doe must be wondering that why do I have credit in my bank account when I deposited it, because the real entry should be debit. But no, bank will create statement from the perspective of the bank, not from the perspective of the bank account holder. Hence, they will credit you because the entry in their books is cash account debit to John Doe. As John Doe is credited, okay, and this is debit. Hence, John Doe, hence deposits of John Doe is credited. Okay, let's try the debit one, and let's try it with logic. Now you might have understood the entry should be John Doe to cash, hence John Doe is debited when amount is taken out of the bank. But let's try it ourselves. Going back to our blackboard, where are you? Okay, yeah, right here. And what should be the entry of deposits? What should be the entry of withdrawal or payment? Withdrawal slash payment. For bank, there are only two terms, that is withdrawal and deposit, because bank does not know what is your payment. For bank, either you are making that deposit or either you are taking out that amount in the form of payment. Okay, so banks you widely use the term deposit and withdrawal. Now what will be the entry in our books of account for withdrawal entry? Okay, the entry should be first cash came in, cash account debit, debit is the real account, debit or debit what comes in, and the second entry should be as bank is the giver, personal account, debit what comes, debit the receiver, credit the giver, hence bank account is credited. Okay, so this should be the entry. Let's go from the perspective of the bank. Now bank doesn't care that you are his client, obviously they care, that is they show that they care. Okay, but they have lots of accounts to maintain, so they'll not be entering your entries in their books, they'll be entering from their own perspective so that they have a common view. Now the entry should be, what do you say, I know for the second part of the entry, because cash went out. Okay, as cash is a real account, debit what comes in, credit what goes out account. Okay, but I don't know the first part of the entry. So what should be the first part of the entry? So who is the receiver here? That is John Doe. John Doe is the receiver, debit the receiver and credit the giver. John Doe account debit. Okay, so right here you can see opening, coming back to our statement, withdrawals, and yeah, signature POS debit, Baltimore Giant Food. Okay, let's see what can we, okay, coming right here, that is Baltimore, whatever that city's name is, high respect to that city. Okay, Baltimore Gas Electric online payment $160. Okay, so this entry should be, what do you say, Baltimore account debit to cash account, hence Baltimore is debited in the books of bank, that is from the perspective of bank, hence this is debit. Okay, you can see right here payment to Amazon. So this entry should be what, say this entry should be Amazon is the receiver, Amazon is an artificial person, account debit to cash account as cash went out. Hence in the books of bank, Amazon account is debited as Amazon is the receiver. That is why the entry is debit here. Okay, you can see right here. But in our books, what will be the entry? What do you say? What do you say? What do you say? In our books, the entry will be, in our books, the payment entry to Amazon will be as Amazon is the receiver. What to do? What to do? I can't seem to remember. Okay, as first, the second entry is cash went out to cash account, and this is a payment, that is an expense to Amazon, hence it will be Amazon account debit. Okay, so this right here is actually a parallel entry and is same. Okay, that is why most of the people gets confused, but as it is the same entry, hence they assume that this should also be the same entry. But nope, this is different entry and it is a reverse entry because of this point, because banks create books from their own perspective and we create books from our own perspective. Okay, so just to take down this crux right here, okay, I'll take a screenshot of it and I'll attach it in case you need it. Save my screenshot. Yeah, it is saved. Okay, let's escape it. Actually, yeah, so just to bring out all the crux that we have, and yeah, withdrawals, enter bracket payment is debited, and right here is deposit. Suppose if a client pays us directly, that is also deposit, hence we can write a parallel term for it. Receipt is credit. Okay, okay, yeah, so this is how you can read a bank statement, and that is why bank statements are always confusing. So this is your takeaway and this is your TLDR. So good day, and I'll attach these bank statements. These are not mine, I have downloaded it from the website of Harvard Bank. And yeah, you can read bank statement like this. Right here is another bank statement. So as you can see, debit is withdrawal and credit is deposit. Okay, so looks like the balance was 30. Oops, let me zoom in. Minimize it. Okay, so balance is 3000 and deposited 5000 more, hence the balance comes to 8300, 8039. Okay, and then withdrawal of 5000 again, hence the balance is back to 3000. Okay, so this is how it works. If you want to know other basics of this statement, you can check it out. I'll show you. The opening balance is 18,000. There are 3 credits in this period, that is 1, 2, 3 of 4,293, 20 debits, that is these are the debits, and the ending balance is this. So every entry is created, they show you their balance at the day end. Okay, and these are the combined entries. So if there are three entries in a day, hence they will show you three entries separately, and after each entry the balance. So 18,000 was the balance, $57 went out as it is a withdrawal. Okay, 18,747 new balance. Like this you can study the whole bank statement. And yeah, this one is the credit. This means from 3306 the amount has increased to 653, that is 3959. Okay, so yeah, see in the next lecture where we'll learn about what a budget is, and what are suspense accounts, and yeah, how to correct the clerical errors in an account. So good day, see you, and thanks to this bank.